I want to introduce Cuy, the head of crypto at Visa, and Connor, the head of card issuance at Bridge, who are going to kick off our first panel today as a fireside chat about some of those hard lessons learned. So, thank you guys.
Thank you. Hello, everyone. So today we are going to talk all about stablecoin card issuance and a lot about how Visa and Bridge kind of work together. So by way of introduction, my name is Connor Fitzgerald, head of card partnerships at Bridge, now a subsidiary of Stripe. Bridge, as many of you may know, is a stablecoin payments company. So we enable developers all around the world to build using stablecoins. We used to say that we were the Stripe for stablecoins. Now that we are owned by Stripe, we still say that we are the Stripe of stablecoins. So we do a lot of great work with the Visa team. We offer a lot of different types of products. But today we're going to mostly talk about some of the things we work on together, what the past looked like, the present, and the future. Cuy, over to you.
Yeah, first, great to be here. And I was thinking back to Money 2020 last year, and it was hard to find a lot of stablecoin content. It was actually kind of a weird time. We had a stablecoin breakfast with Bridge. I think Bridge was the hottest story around. It might have been a few weeks before the acquisition was announced. And so just a year later, to see how many stablecoin builders made the choice to come to Money 2020, because now there's so much interest from fintech, from TradFi. Now that you have a whole afternoon, side event. Shout out to Nick and StableCon for putting this together. This is amazing. And so I think the amount of progress that we made in the past year as an industry has been really exciting to watch, and I can't wait to see where we are next year at Money 2020. But excited for this event today.
Yeah, definitely. So, like most people here, this is probably my 8th Money 2020, and there's always some sort of theme. There's always, something that folks are interested to talk a little bit more about. Selfishly, I think this year it's all about stablecoins. I'm assuming everyone here is for the same reason. So Cuy, one, do you feel validated knowing that all these years you were right about stablecoin being the future of finance? And two, where do you think stablecoins are headed?
So it feels a little bit weird, to be honest, of just that stablecoins are so consensus now. It's this obvious thing, and I've spent the last 5 or 6 years of my career trying to convince people to believe that stablecoins will exist, that they'll be a thing. And for those who don't know, I was the crazy crypto guy at Visa back in 2017, 2018. We had Libra come to us the end of 2018, early 2019. I think that pulled the entire stablecoin ecosystem forward. Many companies started really understanding what a stablecoin was with the Libra project. After that didn't work out, seeing USDC and GUSD and TUSD and all these, the next phase of stablecoins launching, it became very clear to us that this is fundamental payment infrastructure. And as much as I love Bitcoin, I think crypto assets are great, we think it's going to be a long time, and we just haven't seen demand for many of our clients to transact in crypto. And so it was very obvious for us when we saw the ability to take all the benefits of blockchain networks, take all the innovation that was happening and the speed that it was moving, and say, why can't you just represent dollars and run them over that same infrastructure that's 24/7, that's global, that's programmable, that have all these benefits? And so to me, it was obvious. It was inevitable, but it really took time to get to the point where we are today. And I think even today, we are still incredibly early around how to take stablecoins from the crypto ecosystem and find ways that they can actually be used by mainstream payments companies and ultimately by banks. And so I think this is a decade-long plus journey, but it's very clear that the fabric of how money moves and the underlying plumbing is changing kind of more in the next few years than it has in the past decade. And at Visa, we're just excited to be a part of it and help accelerate it.
Yeah, I think that's a really, really great point. And something that we at Bridge and Stripe see is many of our developers that will come and build with stablecoins are really teaching us some of the net new use cases. And we're seeing a real shift, especially over the past 6 months, a lot more banks and traditional kind of Web 2 players are coming to see how they can build and optimize using stablecoins. And so, to your point, Cuy, I think over the next even 6 to 12 months, we're going to start to see blossoming use cases across both Web 2 and Web 3, which I'm incredibly excited for. Is there anything in particular that you're most excited for as we see more stablecoin adoption?
I think as a starting point, like we look at stablecoin linked cards as a brand new product construct and category. And it's something that really didn't exist at scale even a few years ago. And we've seen crypto cards. There have been crypto-linked cards tied to exchanges. You could spend from balance of Bitcoin. There have been crypto rewards cards. It's really only the last 2 years that we've started to see all of these developers that are building brand new products that many times look and feel like a neobank, but it operates on stablecoin rails and runs in 100 different countries. And so if you think about stablecoins as a better form of infrastructure to build a new neobank product, you then need to be able to connect it to the rest of the world and to add utility where people can easily be able to spend that balance. And for us, we think that we know how hard it is to change consumer behavior. And the notion of ubiquity is so important that if you're going to depend upon a wallet as your primary financial service, if you're going to put your paycheck there, if you're going to save there, you need to know that you can get that money out. And so we've seen that there's been this barrier of, if you don't believe and it's not easy and you're not able to see time and time again that anytime you need to pay for something, the stable coins that are in that wallet can immediately be unlocked in the real world, you're going to be less likely to keep funds in that wallet. If you have to plan ahead and figure out how to off-ramp, how to move the funds back to your bank account. And so we think that the card rails solve a really important problem in adding utility that then unlocks this entire developer ecosystem that you're seeing of people building new neobanks, new wallets, new remittance products on top of stablecoin rails, that now the barrier to entry and the cost to create a product that can look and feel like Venmo is significantly dropping. And then if the barrier to entry and the cost of being able to attach a card to it, we think there are going to be hundreds or thousands of new products that come to market in the next few years, and that's incredibly exciting. And in many of these, they will be in markets that we haven't had a lot of card penetration before, and that stablecoins are solving problems in emerging economies that the traditional banks there weren't providing cards that were really meeting consumers' needs. And so it's been really great to see the development. That's an area we're continuing to invest in and excited to be working with leaders like yourselves.
Yeah, I totally agree. I think what we have really seen with our global issuance product that we have built with Visa is many of these fintechs that are being built across the world are leveraging stablecoins in order to create true borderless fintechs, borderless neobanks, and many of these markets in Africa, in Latin America, where we haven't really seen that much card penetration previously from older models, we're now able to really offer the right financial products to developers and builders in all of these markets, which has been truly inspiring to see. And we're really learning a ton. I mean, we had one partner launch in Bolivia in a single day and gained 25,000 cards. I mean, there are various fintechs that are building with Bridge where we're seeing so much success that it's truly incredible to be a part of. And so, Cuy, what do you think about kind of the future of stablecoin linked cards? What do you think is next?
So when we look at it as a category, I think the first thing that's exciting is there are a ton of use cases within that category. We see custodial wallets, we see self-custodial wallets, we see corporate commercial card programs, we see interesting credit models, we see remittance companies that are doing payouts and then issuing a virtual card for the last mile. And so we think that there's going to be a whole new generation of companies built with stablecoin linked cards. There are going to be fintechs who have been US based that are going to be scaling globally using these cards. And so it's going to be many of these different use cases coming together. And one of the areas that we spend a lot of time on is how do we continue to evolve and upgrade Visa's network to be able to better support these different types of card models. And one area we spent a bunch of time on is this idea of stablecoin settlement. And so for the crypto people, the way I like to think about Visa is that we are arguably a layer 2 network for traditional finance that is globally accepted at 150 million merchants, that does 65,000 transactions per second, that has perfect privacy, that works really, really well. We can authorize transactions in real time. But when it comes to actually move the money, that's not as easy to do. We depend upon layer 1 traditional finance networks, like Fedwire, like SWIFT and correspondent banking, where we can't actually move the money as frequently as we can authorize transactions. And so when we look at blockchains, we see them as this next generation settlement rail. It's a new layer 1 that we can sit on top of. And so my dream, and it's going to take a while to get there, but you could have a future where VisaNet becomes a real-time payment network on both authorization and money movement, where you could have someone tap to pay with a Visa card and a merchant. The moment the authorization happens, money moves from the issuer to Visa to the acquirer to the merchant, and you could start to have this concept of streaming money and streaming settlement. And so that's the long-term direction that we're going. And we started with saying, okay, can we accept stablecoin settlement from issuers? We've got issuers doing that on our network today, doing it 7 days a week, doing it on bank holidays. It was a crazy thing to me that we're in 2025, Visa's the most sophisticated payments company in the world, and bank holidays are a real problem. If you're in Foster City with our treasury team, we have credit risk in our system because we can't move money when there's a holiday on a Monday. And so being able to have this better next generation settlement rail is a really, really big unlock. And being able to do that on the issuing side around how funds move to us, and then starting to do that on the acquiring side, being able to settle with acquirers, we think there are a number of ways that we can make Visa significantly more efficient and make it easier for the next generation of stablecoin linked card providers to collect a stablecoin from a customer, immediately route that to Visa for settlement, and have a more on-chain native version of a card. And we're still in the early stages of this, but we're moving stablecoins every day, and we're seeing that they're solving real problems for our clients.
Yeah, wow. I mean, I think the more that we can keep a lot of this on chain is likely the direction that we're heading, and where we've been building with all of these different flows, both on the custodial and non-custodial side for the bridge card, we are seeing a lot more folks want to keep more on chain because there's really so much more we can unlock by keeping it on chain. I know one of the things that Cuy, we've talked a little bit about is how we rethink credit on chain. Do you have any thoughts there?
I have a ton of thoughts. Anyone who's been spending time with me lately, I've been going deep down the on-chain credit rabbit hole. I think first, this concept of DeFi has been around for a while. DeFi summer in 2020, it was a fascinating time. When I talk to payments companies, when I talk to banks, the term DeFi, it doesn't really resonate. And so we got to be better at translating to traditional financial institutions. They don't want fully decentralized finance. That terrifies regulators. Tell a bank regulator about DeFi. Instead, we're seeing on-chain lending, on-chain credit, where there is an advantage from a technical standpoint of being able to use a smart contract. And so when I think about stablecoins from first principles, I think we're still at such an early stage that people have figured out that these things can move globally 24/7. That's great. That's a really valuable property that most other payment systems don't have today. But then they can also be programmed. And so the fact that you can write code in smart contracts that enable a new type of conditional payments. We've had conditional payments for a while. You could pay a recurring subscription and the condition is time. But being able to have any arbitrary logic that can then trigger a transfer of stablecoin, we think is a very, very big deal. And so then if you go back to DeFi and you say, the crypto ecosystem has been using this property of programmability, for half a decade now. And I was asking my team, how many loans have actually been originated and dispersed in stablecoins over the past 5 years? I thought it was a simple question. It turns out it took 2 months to figure it out. We had to work with LatAm and Artemis and all the data providers, because you've got a bunch of stablecoins running on a bunch of chains with a bunch of DeFi protocols. You're parsing the smart contracts to figure out what's actually happening there. But we finally got to the answer. So we put out a white paper last week. We found that the last 5 years, there have been $670 billion of stablecoin denominated loans that have been originated and dispersed on chain. That's a really big deal. And so that proves that this infrastructure, it's working. Smart contracts work. And so now the question is, how do you take those innovations and how do you enable that to come into more mainstream traditional financial systems? And so a lot of people say, oh, it's all crypto collateralized. Okay, well, crypto assets are growing, and could you have a whole new class of asset-backed, crypto-backed cards where you're actually borrowing a credit line against your assets? What about all the new assets that are going to be tokenized? We're seeing tokenized gold and tokenized treasuries, tokenized receivables. Could those become collateral in a smart contract? Could the same protocols that are powering DeFi and crypto collateralized loans incorporate credit scoring and enable underwriting and credit scores to be passed through them? And so we think that the same infrastructure that has been built out in DeFi is finally getting to the point where you could start to imagine some of these use cases coming into at least fintech and eventually TradFi. And so we're really excited to see that 5 years from now, 10 years from now, you're asking me, what is Money 2020 going to look like 2030, 2035? I think we could look back and say that stablecoins ended up having a bigger impact on global credit markets than they did on the payments ecosystem. And if you see this unbundling of payments and credit, and you see the ability to create these global credit facilities, like how many people do cross-border lending? That's not really that much of a thing. Well, it's a thing in DeFi. And so trying to figure out how do you add the right permissioning, the right guardrails, the right controls to get this stuff ready to be able to scale, to me, that's the most exciting part of the ecosystem right now. And I think stablecoin linked cards that are debit prepaid, they solve a real problem. Those are live today and they're scaling. We think there's going to be a whole generation of stablecoin based credit products that the entire end-to-end stack could be rebuilt on chain and enable credit to people all over the world that don't have it today.
Yeah, I really love the angle of true financial access by keeping things on chain. I think it of course to me begs the question, is the FICO score going to be the right determinant for those who are looking for credit? Likely no. So there will likely be players that come up to help with decisioning based on transactions that are on the blockchain once we hit kind of a critical mass, which I'm really excited about.
I think that's the right question. And it's interesting. I spent a lot of my time talking to banks. And I really like talking to banks about stablecoins. It's fascinating. They have a very different perspective than when you talk to other crypto people about stablecoins. And so what I find is if you explain to banks, okay, you've got this $670 billion of loans, but it's all collateralized by crypto. So what does that mean? There's some segment of banks that actually say, it seems like Bitcoin could become a legitimate form of collateral that's pretty useful. And it seems like there might be customers, when you think about secured cards traditionally, it's like a credit builder product. Here we're talking about secured cards for high net worth individuals, who might have millions of dollars of Bitcoin and they want to be able to lock that up as collateral and get a loan against it. And so we're starting to see a set of banks that actually look at asset-backed lending and say that doesn't seem that crazy to get into the space where we can provide a credit line with Bitcoin as collateral and we know that we can liquidate that. I think for a lot of the private credit funds, it's been very hard to scale asset-backed lending with traditional assets in many different markets. If Bitcoin exists all over the world, if you trust the smart contract, I think there are a lot of ways that you can do global, cross-border lending. And then I think there's another class of banks that say, it's not really for me. We think that the unsecured lending market is 1,000 times bigger than the secured asset-backed lending market. And so what standards need to be in place? How do we capture the intent and the data that we have from our customers and then be able to pass that through one of these protocols? How do you do that in a privacy-preserving way? What data do you need? And so there are a bunch of these questions that it hasn't been solved yet, but I think we're starting to get, the base layer was, can we trust that stablecoins work? Can blockchains be fast and cheap enough? And I think the combination of the Genius Act, the innovation in the underlying chains, that's getting there. Then it's the application layer. Can we trust these smart contract protocols? Do they actually work? Are there the right standards to transfer data on top of them? I think that's what's going to happen over the next year. And I think we're going to see banks that you probably wouldn't expect actually rolling out products where they're doing asset-backed lending, dispersing stablecoins, with crypto assets as collateral.
Yeah, I mean, it is it seems quite interesting. I think the shift that we're seeing at Bridge, like I had mentioned before, is many banks and traditional Web 2 companies are coming and wondering, how do I get involved? And I think that there is an entirely new unlock. I'd say the cross-border credit piece is quite interesting. Cuy, how do you think we get banks comfortable in even approaching a subject like that?
It's going to take a lot more than a white paper. I think that's the starting point to open the discussion. I think when we talk to banks, I think that looking at stablecoins as a payment rail is a more natural, easy starting point to get the infrastructure to be able to support it. And I think it depends where the banks are. I think when we talk to banks in emerging markets, they're seeing many of your clients starting to roll out really advanced dollar-denominated accounts, and they're feeling the competitive pressure. And so we're seeing some banks saying, should we offer dollar-denominated accounts? And if we do that on top of a stablecoin, is that cheaper and more efficient than doing it through a correspondent banking relationship? I think if you talk to banks in the U.S., really don't have any incentive to hold stablecoins or offer a stablecoin account to a consumer. But they're interested in saying, could we offer this as an on and off ramp? Should you be able to take a stablecoin, deposit it into a bank, have a clearinghouse that on the back end can immediately sweep that, convert it into a deposit? Can you be able to withdraw a stablecoin from a bank? And so it's exciting to see there's a whole new class of companies and infrastructure being built out to enable banks to integrate stablecoin wallet functionality with core ledgers, enabling them to accept stablecoins, auto-convert it. And so I think we kind of have to get that in place first, of just the basics of how do you send, receive, hold a stablecoin. Once you can do that, then there's this entirely new world of applications that you can build. And I think that the potential of smart contracts and all the things that you can do with them, we're going to see it go in a bunch of different directions. But there's a ways to go to explain it to the OCC and many bank regulators before banks are ready using smart contracts.
So the TLDR for me, it sounds like baby steps, crawl, walk, run. It will be a masterclass to try and say, okay, first we'll set you up with wallets. Next we'll see what we can do with those wallets. And then maybe phase 3, 4, 5 is cross-border lending. Something like that?
Something like that. The concept that fascinates me is this idea of, if you're a bank today, you have customers who might want to borrow, and you don't necessarily lend to every customer you have that wants to borrow. You have limitations based upon your balance sheet. They might be a different risk profile. And so what does that customer do? Well, if they want that loan, they probably leave the bank. They probably search on Google, I want a loan. Google sells AdWords, and then they end up signing up with some alternative lender. I think there is a future where we see more of this intersection between private credit and banks, where you could have banks basically capture intent. They have the distribution, they have the branches, they have the customer relationships. You can capture the intent in the data that a customer wants to borrow. You can then pass that intent through into one of these credit protocols that can then be matched with someone on the other side who disperses the loan in real time in a stablecoin that can then be off-ramped, could be spent on a card. And so I think there are a lot of roles that banks can play continuing to own the end consumer relationship, even if they are not providing 100% of the credit and lending to their customers. But they need the underlying infrastructure. Regulators need to get comfortable and really understand. We haven't even gotten to the rulemaking of the Genius Act yet. Everyone talks about being Genius compliant. It's like we're still trying to figure out what are all the rules going to be. But I think it's very clear that the groundwork is happening on stablecoins becoming plumbing. As they become plumbing, new applications will be built on top of it.
So related to, I guess, more of the short, medium-term applications of the stablecoin plumbing that is in flight right now, what are you most excited about in, say, 3 to 6 months? I feel like something changes every 60 days working in this space. What are you most excited about that's coming down the pipe for Visa in 3 to 6 months?
I think in the short term, it's all about scaling the work that we've done on stablecoin-linked cards and stablecoin settlement. And I'm glad that we started when we did. It's been, I think, a little over 2 years. And it was kind of this crazy experiment of we're gonna have an issuer send us funds over a blockchain, and which blockchain, and what if it goes down, and how are we going to reconcile it? Like there were all of these like questions, and it was we wanted to be very, very careful, roll it out, have caps on the volume. I think we've gotten to the point where we know how to do this, and we know how to do it with USDC. We're adding USDG, we're adding PYUSD. We started with Ethereum, we added Solana, we added Avalanche, we added Stellar. And so I'm excited to see, like, if you think about Visa Treasury, is this kind of amazing complex system that is able to move money between 15,000 banks across the world. And it was almost like we were two-dimensional, where we could accept dollars and pay out euros. And then now we're saying, okay, well, there are multiple different form factors of dollars. So now we can accept traditional USD, and we can accept USDC, and we can pay out euros. And then you say, okay, wait, USDC runs on multiple different blockchains. And so then you have this third or fourth dimension where we need to be able to take any stablecoin running on any chain, be able to accept it and convert it to any fiat currency running off chain. And so in a way, it is orchestration. It's a lot of what you all have been doing in the broader developer ecosystem, but doing it between 15,000 financial institutions. That we recognize not everyone is going to upgrade at the same time. There are going to be banks that don't touch a stablecoin for a decade. But you still have to have a way that works, that if that's a bank acquirer that's going to operate in fiat, but your card program is operating in a stablecoin, how can we seamlessly receive that stablecoin and pay out fiat on the other side? And so I think we're getting to this point where we're hitting the inflection point of the curve in the growth and the scale of what we can do on the card side and the settlement side. And so expect to see a lot more from us in announcements of partners and ways that we're using Visa Treasury to scale that business.
Great. I think that is all the time we have. Thank you so much to Cuy, and thank you to This Week in FinTech and Borderless for this event.
Thanks for having me.